Management consultancies and professional services firms filed 13,240 R&D tax credit claims last year, recovering £1.37 billion from HMRC. Most management consultancies that qualify are not in that number, and the reason is almost always the same. The firm assumes that because the work involves people rather than machines or laboratories, it does not qualify. In the next 7 minutes, I will show you the two-part test HMRC applies to consulting work, the specific activities that do and do not qualify, and what the recovery typically looks like. By the end of this video, you will know exactly how HMRC's qualifying test applies to management consultancy work. You will know which project types and which staff costs may be claimable, and you will know the next step if you want a specialist to assess whether your firm qualifies and for how much. No jargon, no sales pitch, just 7 minutes. This video features an AI-generated presenter. All content is for educational purposes only and does not constitute tax or financial advice. Always consult a regulated specialist for your specific circumstances. Here is what the data says. HMRC's published statistics for 2023 to 2024 show the professional, scientific and technical sector as the third largest sector by claim volume. 13,240 claims, £1.37 billion in total relief. That sector includes management consultancies, strategy firms, operations improvement practices, technology implementation specialists. The awareness gap in professional services is not about the quality of the work, it is about a mental model. Most consulting partners assume R&D credits are for laboratories and product companies. They assume that thinking, structuring, and solving problems does not qualify. HMRC's actual definition is much broader than that, and it is the gap between the mental model and the definition that costs consulting firms money every year. HMRC asks 2 questions about any R&D claim. First, is the company trying to achieve an advance in science or technology? For a management consultancy, this does not mean inventing something new to the world. It means applying science or technology to resolve a problem where existing knowledge and standard methods are not adequate. Second, does that work involve resolving genuine technological or scientific uncertainty? Uncertainty, in HMRC's language, means a competent professional in the relevant discipline could not have solved the problem by applying publicly known techniques. If your team is genuinely working out how to apply a new approach because existing approaches do not produce the answer, that is uncertainty. Now here is where consulting work gets interesting. The work does not have to be packaged as a research program. It can sit inside client project delivery. It can be internal tool development. It can be methodology development that the firm uses repeatedly across clients. What matters is the technical content of the work, not the label on the project. Let me be specific about what tends to qualify and what does not. Activities that may qualify. Developing a proprietary analytical model or algorithm where standard statistical methods produce inadequate results. Building an internal data integration platform to connect client systems in a way that no available tool achieves. Creating a sector-specific simulation or forecasting model that requires novel technical approaches. Designing a process optimization method where the technical constraint has not been previously solved. Activities that typically do not qualify. Applying existing consulting frameworks to a new client situation. Implementing standard software in the way it was designed to be used. Producing reports or strategy documents, even if they involve significant analysis. Market research, social science, and commercial uncertainty. The line between this is technical problem solving and this is applying known methods is the line that HMRC draws. It is not always obvious, which is why specialist assessment matters. Let me give you some numbers. Under the merged scheme, a profitable consulting firm recovers approximately 15 pence for every £1 of qualifying expenditure. Qualifying staff costs for a consulting firm typically mean the salary, employer national insurance, and employer pension contributions of the technical staff who worked on qualifying projects, apportioned for the time they spent on those activities. A firm with 6 engineers or technical analysts, each spending 40% of their time on qualifying work, at an average total employment cost of £100,000 per head, has qualifying expenditure of around £240,000. Under the merge scheme, that is approximately £36,000 per year back from HMRC. For a firm with a larger technical team or higher qualifying intensity, the number scales accordingly. One more thing that matters, specifically for consulting firms. R&D claims must be submitted within 2 years of the end of the accounting period they relate to. Many professional services firms have been conducting qualifying technical work for several years without knowing it qualifies. That means the most recent 2 periods are still potentially claimable. Every year you wait, another period moves out of the window. A specialist assessment takes less than an hour. If there is nothing there, you will know quickly. If there is something there, the clock is already running. So, to bring this together, if your consulting firm develops technical methods, tools, or models where existing approaches are not adequate, you may have qualifying R&D activity. Your qualifying costs include the technical staff time spent on those activities, plus subcontractor and compute costs where they apply. The professional, scientific, and technical sector recovered £1.37 billion last year, and if your firm has not claimed before, the 2 most recent accounting periods may still be open. That window is worth checking. If anything in this video resonated with your situation, the next step is straightforward. There is a free, no-obligation specialist assessment linked in the description below. It takes 5 minutes to complete. The regulated specialists I work with operate on a no-win, no-fee basis. If your firm does not qualify, there is nothing to pay and nothing to lose. The link is uplifttax.com/partners/E5J3P6. It is also pinned in the comments. If you found this useful, the video on why your accountant may not have mentioned this is worth watching next. It is on screen now. I will see you in the next one.